Let's react to a bunch of the TikTok videos that you all keep tagging me in. My name is Nick Kropp. I'm a CPA, and I debunk bogus tax tip videos that you see across the internet. Or I will let you know that they're correct, or at least which parts of the video are correct and you should actually listen to. So let's just jump right in.
Here's a tax loophole that influencers use to save millions on taxes, and the IRS definitely doesn't want you to know about this.
Whenever a video starts off like this, there's basically one of two ways this can go. They're either going to tell us the most mundane and well-known IRC tax code, or they're going to wildly misrepresent a piece of the tax code. Let's see which way this one goes.
Called Section 162A.
All right, it's the first one. Section 162A just tells you that a business expense is something that is ordinary and necessary for your business. It is just the predicate under which we determine whether or not that is actually a deduction for your business or not. In fact, this is definitely something the IRS wants you to know. Let's keep going. Let's see how this is magic for this guy.
It allows you to write off anything that you use in your content as a necessary and ordinary business expense.
It does not allow you to write off anything that you use in your content. It allows you to write off those things that are ordinary and necessary for your business, which might be content creation or revolving around the thing that you are creating content for, such as microphones, cameras, lights, things like that.
And since influencers have a personal brand, they're able to write off many personal things that normal businesses can't.
Every business is going to have different ordinary necessary expenses compared to other businesses. That's just the nature of businesses being different. But having a personal brand does not allow you to write off a bunch of personal expenses. Do understand this.
For example, luxury cars, watches, clothing, and other personal items that would usually be considered owner's pay or a draw that would normally be taxed are now able to be written off against your income.
Luxury cars in general, sure, if you need a car for your business, if you're traveling around a lot to other locations, things like that, you could deduct it. Just having content creation and putting it in your videos does not make it any more deductible. Clothing and watches are pretty much going to be most likely a hard no. Those are generally seen as personal expenses. Take a look at the IRS Audit Technique Guide for entertainment expenses and personal brands and things like that. You'll find a lot of court cases backing up their position that, generally speaking, those are personal expenses.
If you want to save money on taxes, you might want to consider creating some content.
That is very valid. Yeah, if you want to have other deductions beyond just your niche business itself, do another business, which would be potentially content creation and things like that. But it does not open the door to now everything you put in your videos being deductible. And again, Section 162A, it's just saying that things that are ordinary and necessary are business expenses for you, and make sure you understand what you're deducting. All right, what else we got going on?
At the end of every single year, I have a serious problem. Uncle Sam always comes knocking on my door, and he wants to collect. You see, there's something called Section 179 in the tax code, which allows you to buy something that weighs over 6,000 pounds and write off 100% in year one.
That is not how Section 179 works. It's not just anything you buy that's over 6,000 pounds is eligible for 100% expensing in the first year with Section 179. There are specific things that are allowed, especially when it comes to vehicles, to be fully expensed. But the thing that he's in right now, a G-Wagon or something, some kind of SUV, is specifically not allowed to be fully expensed with Section 179. It's bonus depreciation. It's a different section of the tax code. It's Section 168K. And while it might be semantics, do understand bonus depreciation is going down to 80% in 2023, and then it's going to be decreased each year thereafter. But not only that, if you're going to be smug and kind of an a-hole, telling people about like how rich you are and how cool you are and knowing certain things, at least try and understand the thing you're talking about, because you clearly don't.
Now here's the thing. Everyone always says, chase your dreams, but as soon as I get something nice, now everyone says I'm not a real landscaper. Now you may not be able to buy one of these mowing lawns, but in reality, that's not my problem. Now if you do want a car like this, ditch the lawn, start a successful landscaping business with a really good team, and run, Forrest, run.
Now do understand, there's absolutely nothing wrong with buying a nice vehicle to use in your work. If he's going to be driving this from job site to job site and he's using it 100% for business, then it could be fully deducted inside of his business. Now, he may not be able to fully deduct that first year, 2023 and moving forward, because bonus depreciation has been reduced. It still is certainly going to be a large deduction for him. But again, if you're going to give advice to people or act kind of smug about the things that you're doing, try and understand the thing that you're actually talking about. All right, what else do we got going on? this guy. Carlton Dennis is actually an EA. He's an enrolled agent, which is a certain type of licensure, meaning you're not a CPA. You basically took the part of the courses that allow you to be very specifically honed in on tax. It's a very good designation to have, and it means he's going to be very smart about the tax code and how taxes work and tax preparation and all of that stuff. So he's a smart guy, for sure, at least when it comes to taxes. Every single video I see that he posts on TikTok or Instagram or anything like that it gets sent to me just are so unnuanced that they're bad advice. And it pains me to see his videos. This one in particular. Let's take a look. There's nothing wrong with saying I'm adding my wife as a business partner or an employee, so now we can take some meals as business expenses. But saying it like this makes people think that every meal I take with my wife is going to be a business deduction. It's not the way that works. In fact, it's going to be a quick way to get yourself audited when you have really high meal expenses and it's all just you and your wife. Be smart with this tax strategy. I don't even know what he's trying to say here. Is he trying to say that you can write off all your business travel if you have business intent? It's not even the right way to put this. I would say travel with business purpose, because that will allow more of your travel to be deductible. Like if the majority of the purpose for which I'm traveling somewhere is for business, then my entire flight costs can be deducted. And then the days that I'm there on business, wherever I travel to, can be deductible. My hotel, my car, my meals, things like that. But traveling with business intent doesn't mean anything. And it's just generally bad advice. And not only that, again, because there's no nuance here, this is making people think, well, if I travel with business intent, I think I'm going to be driving around looking for stuff while I'm down there so I can write off my whole entire trip. Not the way that works. Again, add a little nuance. You're a licensed professional. You're not just some TikTok influencer. Sure, it's definitely a good idea to film the things that you're doing while you're on vacation in order to prove the business purpose, business intent, business purpose that you're down there for. This clip, though, is just so awkward to me. Like, I just feel like he held it for too long, and she just feels so... Oh, man, it's like she was waiting for a picture to be taken. Just let's watch this again. Oh, man. It's like 3 seconds. Oh, it's too long. I don't know. Maybe it's just me. She's like, can I stop smiling now? Am I done? Are we done with this? Use only business cards, not personal. Yeah, I mean, put your business expenses on a business card. But are you trying to say that as long as I put all my expenses on my business card, they're now deductible? That's not how that works. If I put personal expenses on my business card, that's still a personal expense. You have to understand, when it comes to taxes, there's something called substance over form. What that means is, it doesn't matter that the form of my transaction is on a business card, right? It matters about the substance of the transaction that I'm actually partaking in, right? So if the economic substance of a transaction is personal, regardless of the form under which I do it, under my LLC, my business card, whatever it is, it's going to be personal. In the same way, if I take a business expense, something with an economic substance for my business, and I put it on my personal credit card, it's still a business expense. And I should go ahead and just reimburse myself for that business expense. And now I can take that deduction in my business. Substance over form. Again, no nuance given here. So what is the layman to think by this advice? If I put everything on my business card, it's now deductible. It's just such a stupid video, and I hate it so much. Carlton seems like a really nice guy, and I would love to have a conversation with him, maybe. He doesn't reply to anything on any of his social media channels, so I'm assuming he just has someone post things for him, and then he'll just never get back to them. But again, he's probably a really smart guy. I've seen books that he's written and things like that. I'm sure he's credible, and I'm sure that when you actually get on the phone with him, it's a little bit of a bait and switch where you're thinking you're going to get all these things, and he's like, that's not really how that works. But we are licensed professionals. When we post things online, we should provide that extra 5 seconds of context to make sure that we aren't purveying bad information to the public. Just my thoughts. I said he just wanted to record his nice vacation to make himself look rich. Or whatever. Good for you, Carlton. I'm glad that you're successful. That's fantastic. I hope that you and your wife had a fantastic vacation. But put better content out online. That would be great. What else we got going on?
If you're a digital nomad, the best state to get residency is definitely South Dakota. It's one of 9 U.S. states that doesn't have an income tax, vehicle inspections are not required, and car insurance rates are low. It's also super easy to establish a domicile in the state. All you have to do is stay in South Dakota for at least one night. You barely even have to see the place. Dakota Post is a company that can take care of your mail, and they also provide a lot of good info on their website. Follow for more digital nomad.
This is actually totally fine advice if you are someone who truly does not have a state of residence. In other words, you don't have a piece of personal property in any state, right? That you need a state of residency because you are going to be traveling around, laying your head to rest in nowhere consistent. I would definitely say find a non-tax state such as Texas, Florida, South Dakota, or maybe Nevada or something like that. Find one of those states and establish your residency there, right? Which would be getting your license there, registering your vehicles there, having some kind of mailing address there, having bills there, all of that good stuff. It's actually accurate. I really don't have a problem with this. The only thing you need to understand is this does not mean that if you are a legitimate resident of another state like California and you're like, I'm going to go just get my license in South Dakota. I'm going to do all these things to register my vehicle in South Dakota so I can become a South Dakota resident. It's not the way that works. If you are fully a resident of another place, just because you establish all these things in another state does not mean you're now a resident there. It does matter where you actually lay your head to rest. It matters where you're actually spending the majority of your time. So this is a totally fine thing. If you are someone who truly does not have any real pull to any state one way or another, talk with your accountant about how you can establish residency in a place that's going to be the most tax advantageous for you. But again, this is a good conversation one-on-one between you and your accountant. I really don't have a problem with this video. He does specify this is for those that are nomads who don't have any real state. I don't necessarily have a problem with this video. It's fine on its face. But again, take this conversation to your accountant. Have a conversation with them. Now let's take a look at one more.
Let's talk paying no taxes in America. Buy a plane for $700,000.
Wow. Okay.
You put $100,000 down, you finance $600,000.
It's better, but you have $100,000 and need a plane for your business, apparently.
But you take the full $700,000 as a tax deduction, which in the 40% tax bracket saves you $280,000. Even with $100 down, you're still up $180 grand. You then lease the plane back to a rental company.
I haven't established under which business I'm taking this deduction. So I think he thinks that if you just buy a plane that you're going to get some kind of deduction somewhere in life for this. It's not the way that works. You'd have to have a business that needs a plane that you're using for business, for that business, to take the deduction. But then he says to go ahead and lease that back to something. So I'm actually just going to ignore everything he said before, and let's just say that you leasing the plane is your business under which you need this asset.
They rent the plane out, you make money every month, you fly for free, and you're up 180 grand the first year. Zero tax, 180 grand, fly free. That's a hell of a deal.
Okay, I don't know if you know how expensive it is to own and operate a plane, but you'll definitely never be flying for free. That's a ridiculous notion. Now, that said, yes, if you have a plane rental business and the plane is your asset, planes are actually eligible, non-commercial aircraft, are eligible for full 100% bonus depreciation as long as you use 100% in your business through 2023. It's not until 2024 that they start their decline down to 80, 60, 40. Now, that said, he does mention that you get to fly for free. Now, as soon as you start using it personally and not for business, then you are decreasing the percentage of use it is for business, meaning you're decreasing how much you're actually able to depreciate in that first year. So you're probably not going to get the full $700,000 deduction because you're not using 100% for business. It could still offset a lot of that initial cost that you have and save you a good bit in taxes. Do understand you now have a $600,000 plane loan that you're going to be paying off each year, and if you fully deducted the amount that you can deduct in that first year, you're not going to have any depreciation going forward. And you're still going to have those operational costs when you fly for yourself. It's not going to be deductible in the business, such as the cost of a pilot if you're not an actual pilot yourself, the cost of gas, insurance, repairs, maintenance, and all of that good stuff. But I mean, yeah, I guess if you want a plane and you want to find a way that you can deduct the majority of it especially when you're not using it, not a bad idea to get a plane and use it as a rental somewhere else. Good thing to discuss with your accountant about how you might be able to strategize around that. Well, that about does it. Thanks so much for watching. Be sure to like, subscribe, comment, and hit that notification bell. And also be sure to tag me in any videos that you see across the internet, such as TikTok or Instagram. And I'll see you all in the next video.